Alright guys, welcome back to the channel. I want to share with you another few opportunities here this week that we're looking at. I like to do these on early on a Tuesday, particularly after the Monday when the dust has settled and the kind of markets are showing a true reflection of what's likely to happen next after all the positions have been taken off over the weekend, and then people get their positions back on, and then we get a true reflection on a Tuesday of what market's actually doing, and then we can kind of make our predictions of what's likely to happen next and then get involved in some setups. So 3 setups on the radar. There's more than that actually, but I'm going to just share with you 3. Aussie dollar. We're going to look at the euro dollar, and we're going to look at the pound yen, and there's going to be different setups depending on what type of trader you are, so you can follow along. You can go, we don't like hindsight trades, so you can go and follow this after this video, which is typically what I like doing, and then you can follow along. So let's get stuck in. The Aussie dollar, we're in this level of consolidation here, and all we're doing is we're not in a trend. We're not in a directional trend, so all we're doing is we're predicting what's likely to happen next, and all I can predict is we're going to continue to consolidate until price either breaks the highs or we see some kind of rollover here. But where we're at now is we're at the lower level of this support, this structure consolidation support zone, and we're approaching that level right now. Now previously, you can see that we had a retest here, okay, and it was a really nice hold. Definitely protection at 74.65s, and you can see that from each of these candles here. Definitely protection there, and it also, even looking left here, you can see we had a little hold there as well. So we're approaching that zone now. So what we can do is start to look how price is behaving. Now the first indication that's attractive is the fact that we've got 1, 2, 3, 4, 5, 6 bearish candles in a row. We know this doesn't go on forever. Okay, big rollover here, one after the other. Now, the market looks like we're putting in a low test candle wick here. Now look at the time. This is the hourly chart, and the time is 7:54 a.m., which means we've got about 5.5 minutes until the close of this candle. Now, if this happens to be a low test candle wick, then that could potentially set up, that could be your entry. So if you're real aggressive, you could enter next bar market, waiting for this to close to confirm that we are a low test candle wick or a doji, right? Or a pin bar, whatever you want to call it. Or you wait for a 3-bar reversal. So you're a bit more conservative, and you wait for a higher close on the next hour and then enter next bar market. Okay, but either way, this is a real nice setup here because it's confirmation that we're running out of steam. We've got a rejection or protection at this level at 64.65 or 74.65, sorry, and its previous structure. Not quite deep into the zone yet, so we may dip down a bit more, but it's a real nice signal that we're likely to see a bit of a rally. Now, how aggressive you are with target taking, you could literally take targets all the way up here at the resistance zone, or you might be a bit more conservative with target taking, or you could base your target taking depending on how aggressive your entry. So if you enter on the aggressive entry on the doji, you might take targets at, you know, inside structure here. If you wait for a 3-bar reversal, you're getting a bigger risk on the table, bigger stop, but you might take bigger reward because of the extra confirmation that we're likely to push up. So you can dynamically change your target positioning based on the level of aggression in your entry. But either way, this is a nice little setup. We'll come back to this in a few minutes and we'll see how we close here. And then if you're kind of looking on the lower time frame, you might wait for a little double bottom down here on the 15-minute or something like that, which of course could be another indication, another reason to get in as well. So we'll come back to this in a moment. Now, the euro dollar, we've recently seen this major level tested. It was support where we had these tweezer bottoms, and then it was resistance where we pushed up, tested it, and we bounced off of that level. And we've kind of been in this structure consolidation zone for a couple of weeks. And what we know about structure consolidation on this pair is the euro dollar goes into these zones of structure consolidation where we have this horizontal support and resistance levels being tested over and over again and respected. So for those of you who are structure-based traders who like to trade off of these channels, off the highs and off the lows, this is a great pair for this because it's very prolific with those types of setups. Now, one of the things that you might be looking at here, we're right in the middle of this zone at the moment on the euro dollar. However, if we do push up to this level, this is where you could potentially look to short on a structure-based setup. If we push down to the low, you might be looking at a buy. Right now, we're in this middle of this structure shelf looking left. So this, although it's not, in my opinion, a high probability setup, some of you might be looking at this as a retest because we've got this really nice symmetrical retest here as this V, okay, at this level. The defined resistance zone isn't as clear as I would like. It's not something that I would consistently be able to test. Therefore, I wouldn't be able to consistently take it. But you can see we did respect that level. We rolled over, and some of you might be looking at what we know as a 2618 setup here, which is a bit more of a confirmation trade, a bit more of a conservative entry. So you essentially wait for confirmation of a violation of the retracement, and then you get in on the pullback, and then you short the thing. But some of you identify these consolidation zones as consolidation. You look for consolidation setups, and very, very popular with you guys are the pattern setups, so the ratio patterns. And you've got this nice impulse leg here, X, A, B, we've hit the 50% retracement, we've hit the 382. So now we're setting up for an 886 completion, which would be the completion point of a bat. Now it just so happens that the completion point is at 6742, which is that major resistance zone on the higher time frame. So if you're looking for a set and forget, and you're able to trade these types of setups, and you've tested them and you found them to be profitable, then obviously your completion point is at 6742. You'd get your stops above the high, and then your targets would be either at the 382, which is the conventional targets for these, and target 2's at the 618, or you just use this as an excuse to enter, and then you take the targets at the low. So that's the euro dollar. And then finally the pound yen, we're looking at this setup here. So let's just go out to the daily. Now it looks bearish, okay, but what this is typical of, we're in a bullish trend. This market's been going bullish since early October, end of September, and we had this big bullish run, and then it was only kind of 21st of October, something like that, the first week last week in October, we started to see this rollover. But look where we're pushing down to. Previous structure resistance is right at this level here, which is 155.84. Now, some of you have watched my crypto videos, my Bitcoin videos. You'll know that I got involved in Bitcoin with the same pattern twice running. One in October 2018, one in February 2021, and I took exactly the same pattern. And the pattern is, it's this compression channel. If I drop down to the 4 hour, I'll show you this and you'll see it very, very clearly. What we see is this compression channel, okay, which typically we see the compression, and the tighter it compresses, the stronger the breakout. But there's about 72% chance of retesting the highs here. But before we do that, there's about a 50-50 chance that it goes up or straight up, or we see a little dip down. And if we dip down, it normally reaches about a 20% of the move, okay? And then we see a rally to the upside to the highs. Now, the struggle with this is consistently testing an area for breathing room for your stop loss. You're going to have to either, you're going to have to play around with testing breathing room, stop loss positioning to get the optimum entry so that you don't get stopped out and you give it enough room for the market to do its thing. Or you wait for the breakdown and then you get a tighter stop and you have some kind of method for doing that. But what I do know is there's a 72% chance of retesting the highs. Some of you are looking for the break and close above as well. Usually we see a 50% extension of the high as well. So this is how I got in Bitcoin in 2018. And again, back in February 2021, this is exactly the same pattern that I used. And I also trade this on the dollar yen, New Zealand dollar, euro dollar, and Aussie dollar. I don't trade this pattern on the pound yen. Not saying it's not profitable, it's just because I haven't finished testing it yet. So I won't be looking for this. With the pound yen and the pound Aussie pairs, they're big ATRs, big pairs. I like to take real high probability, high strike rate setups, as well as having a real skewed reward to risk profile in my favor, because I don't, that's how I like to approach these pairs. So I know I'm on the right side of the market. So, but there's some entries for you guys. There's some setups for you. Let me know how you would trade these or what you're looking at on these three pairs in the comments. I love to read those and hear about how you guys are approaching the markets. And until next time, have good luck in the markets, and I'll see you then.